Fears of a double-dip recession in the United States and an anemic recovery here in Europe don't seem to have dented investor appetite for investment in Africa. At least that's according to Alquity Investment Management, who are currently fundraising for a new African equity fund offering daily liquidity. A similar fund launched in 2008, also offering investors the chance to cash in their investments on a daily basis, went down in flames at the end of 2009. So what's different about this fund? Well, I'm joined by David Mcilroy, Chief Investment Officer at Alquity Africa Fund. Thank you so much for joining us, David, here in the studio. I have to ask the question that everybody's been talking about. How are you different from New Star Asset Management's Heart of Africa Fund? We all know what happened there.
Sure. I think what happened in the past with some funds is that they operated at a structural disadvantage and that they concentrated in sub-Saharan Africa. So by excluding the North African markets, Egypt and Morocco, and also South Africa, they excluded the three most liquid markets in the region.
What about the argument that some people make that if you weigh yourself quite heavily in places like South Africa, you miss out on the African growth story because those markets are so much more mature, therefore they're not considered frontier anymore and there's not as much growth opportunities? I
think there's a middle ground, Carina, in that you can get exposure to Sub-Saharan Africa through some South African countries. MTN, the leading mobile operator, actually makes more money in Nigeria than it does in South Africa. But you would expect there would always be a reasonable weighting to South Africa in a Pan-African fund, and the Alquity Africa Fund is Pan-African. We invest from Cairo to the Cape.
Let's talk about what a daily liquidity fund actually constitutes. Why would someone like yourselves be launching this daily liquidity fund as opposed to fortnightly or monthly? And what's in it for you and what's in it for the investors?
I think what's in it for the investors is an exposure to the long-term potential of Africa. We wanted to set up a vehicle that was appropriate both for retail investors and for institutional investors. And daily liquidity is something that has a lot of appeal for retail investors, although I should stress, like any investment in emerging markets, it's a long-term investment proposition and people should be thinking sort of 5 years plus when they invest in the fund. So what went wrong then in the previous experiments? I know it's hard for you to obviously talk about someone else's fund, but a lot of people said that, you know, because it was heavily weighted onto places like Ghana and Nigeria, which themselves are experiencing their own problems, as a result that, you know, created problems for the actual fund. How are you going to hedge against that? What are you doing to prepare yourself in case something like that occurs again? Well, I think it's just common sense investment management, really, so you don't have too much in one market. By investing on a Pan-African basis, we can have the liquidity of South Africa and the North African markets. And I think it's also fair to say that liquidity has moved on a bit in the last couple of years. I mean, on an average daily turnover basis is around $1.5 billion US in terms of average daily liquidity for the African continent as a whole. And while the majority of that is South Africa, our investment universe also includes stocks that are quoted on developed market exchanges like the UK, Canada and Australia, where the bulk of the business or the assets are in the African continent.
So let me ask you about your weighting then, because you say that there's a happy medium or there's a balance that needs to be achieved. I have some data here saying that your initial portfolio is 25% or more weighted to South Africa, more than 50% weighted to Nigeria, a country that itself was experiencing its own problems. Are you confident that this is the right kind of choice?
We have around 25% in South Africa, we have around 23% in Nigeria, and around 22% in Egypt. The fund is run on structural themes. We're trying to play long-term structural themes. So the emergence of a consumer class, land and resources, infrastructure. In terms of the consumer class, there's an emerging middle class in Africa, some estimates of 500 million, who are coming into the formal economy for the first time.
I wanted to ask you about your investment approach, your investment strategy. I noticed you talk about the absolute return approach, where you focus on generating positive returns and not really necessarily attempting to outperform any one index.
Sure.
What kind of flexibility does that give you? Talk to us a little bit about that strategy.
I think that by operating on an absolute return basis, which is not the same as a hedge fund, it just means that you don't try and outperform a particular benchmark index. So select stocks for their fundamental attractiveness and not because they're present in either the IFC or the MSCI. And by doing that, it means that our interests and the interests of our investors are much more aligned rather than trying to outperform a benchmark.
Now, I know that you're quoted as saying that African equity markets have gone through a transformation over the past few years. Can you qualify that? What do you mean exactly? Are you referring to any particular countries? Do you think that transformation is continuing? Where is it headed?
I think it's absolutely continuing. I mean, just over the past few decades, there's been a transformation in the stock markets in terms of size, number, depth. market caps increased over the last 10 years or so from around 245 billion US to around $1 trillion US at the end of last year. Liquidity has been improving and also the number of stock markets, and that process can only continue.
And just generally speaking, when investors say that, the problems that were experienced by some funds in Africa in the past were because of liquidity problems in Africa, do you think Africa is ready to take it to the next level?
I think Africa is absolutely ready. I mean, from our road shows in Latin America and Asia in promotion of the fund, we're finding reaction particularly strong from Asian investors. And I think it's fair to say that the gap between perception and reality in Asia in terms of Africa is much closer. And the Asian investors see Africa for what it is, which is a fantastic business opportunity and potentially the next BRIC market.